So what if I told you you can potentially find the next hotspot yourself? That's right, the next hotspot without getting any help. It's what we call the trickle effect. Now, if you watch this video, I'm going to show you what I mean by just that. I'm your host, Tony Shah, and thanks for joining me on another episode of the Mortgage Chat. So let's face it, right? Everybody here wants to invest in the next hotspot. But guess what? How are you going to find the next hotspot? You're only going to find the next hotspot that is currently the hotspot right now where everyone is investing in it, right? So for example, all your buyers agents are flocking to the same area, diverting all their investors and all their clients in the same area, pushing up the prices, creating momentum, creating FOMO. So all your other buyers are coming in, driving up the prices again, creating a scenario where demand far exceeds the supply of the area. So that area is already becoming so hot. So why are people still trying to invest in such hot areas? Why are you not looking outside of those areas and trying to find more value? Yes, you may have the problem where I don't know where to invest, Tony. And you are correct. That's exactly what's going to happen if you don't get help, right? Or you don't even know how to start researching. But I tell you, there is an easier way if you just think about it, and I'm going to show you in a second why if you think outside the box a little bit without getting any help, you can actually start finding the next hotspot. And what I mean by that is it's going to be a warm spot that's going to have some traction that becomes the next hotspot. I started using this scenario before I started researching with proper data myself, because guess what? Back around 5 years ago, there wasn't such data I can look at. So I had to use my gut feeling when I was investing, when I was a bit more younger, okay? And guess what? It actually did help quite a fair bit, because I actually invested down around the Shell Harbour area where I purchased my first investment property and my first owner-occupied property back around 2015, 2016, where the house prices on these two properties has nearly doubled in price just because I followed my gut feeling and some data about the trickle effect. And I'll tell you what I mean by that in a second. So I say it to a lot of my first-time investors and first-time buyers that can't afford to use any services such as the buyer's agent or research house. What is the next best step to try to do it yourself? Okay, so obviously a lot of people know about the hotspots, right? Let's use Frankston, North Frankston, Dallas, Deer Park, all those areas, for example, as a guide, okay? Now those areas, especially Melbourne, has been very, very, very hot the last 12 to 18 months. House prices has been going up by around 12 to 19% in those areas. Now, why do you, as a consumer, first-time investor, want to get into those areas today? You've heard about it. It's all over media. Every investor is talking about investing in this. So why are you trying to invest in those areas and trying to fight for those limited stock? And also, because the house price has gone up so high, so fast, why do you want to buy in an area that has inflated in such high prices? So what I say to these investors is you have to wait for the trickle effect in the next 12, 18, 24 months. As long as you can wait that long for the trickle effect from these areas to move out to the outer areas. And what I mean by that is, well, for example, everyone is so focused on the hot areas, right? And I'm still going to use Frankston, North Frankston, Roxburgh Park, all those areas, okay, as a prime example in Melbourne right now. Now, because those areas have such high attention from buyers agents, investors, first-time investors, you know, from videos, Facebook forums, chats, group chats, all that, okay? There's so much attention in those areas. The outer regions in those areas are not getting enough love. So what I mean by that is, well, these areas right here, dollar per square meter, might be 10, 15, 20% more expensive than the outer region areas, okay? Now, if you can wait, this is where the trickle effect will come into play sooner or later. Because these areas have gone up so high, so fast, and the outer regions have not grown as fast as these areas right here, sooner or later, the investors in these areas that's chasing these hotspots will go, Tony, they're too damn expensive right now. And because the house prices have gone up by 12, 15, 20% the last 12 to 18 months, the yields have not caught up. So what used to be 4.5% in rental yield 12 months ago, and because the house prices have gone up so high, the yields has probably dropped down to around 3.5%. So therefore, it's too hard to maintain. So what you're going to see is, all right, this area here is becoming too expensive. Guess what? I'm going to find something that's 2 suburbs away where it's going to be 5% cheaper and it's going to be more affordable, and the rental yield is going to be slightly better. And guess what? The next suburb, and the next suburb will have the flow-on effect as well. So what you're going to see here for $750 $750,000 today or $800,000 today with a 3.5% rental yield. If you look at 20 minutes away, the house prices around there could be around $600,000 to $650,000 with a rental yield of 4%. And guess what? There is actually these properties in Melbourne right now that we are looking very close to that's going to have that trickle effect, that has all the data points, that has all the attributes to be the warm spot that's going to be the next hot spot, right? So why do you want to invest in warm spots? Well, guess what? Warm spots is where all the money is made because hot spots already risen in prices, right? Not saying that there's no more gas in those areas, but if you want bang for your buck, you can hold on the property and you can wait a little bit longer, you go for the warm spots that's going to go spike up in the next 12, 18, 24 months. And guess what? You're going to buy at a lower price range. Therefore, the rental yield is going to be quite high, right? So instead of buying something here, the hot spot that's going to cost you around $750,000, $800,000, $850,000, you're going to get a rental yield of around 3.5%. You're going to find the next warm spot that's going to cost you that $650,000, but the rental yield is going to be around 4%. And it's easier to sustain the loan and it's got more room to grow up in value. That's why we love the warm spots, okay? I'm going to give you a very, very quick example why we loved Frankston North. And we've got our clients to invest in that area around early 2025. So for around 2023, 2024, Melbourne was actually the worst area to invest in people's minds, right? Because everybody wanted to go up to Queenstown, Townsville, Gladstone area where the prices were quite low and the rental yields were quite high. But guess what happened around that area? Townsville, the purchase price around that area was around the low 400s and the rental yield was actually around the 5% mark. But because everybody flocked in there, the next 12 to 18 months, the average house price around Townsville was around the low 400s, and 12 to 18 months later, it shot all the way up to the low 600s, and where the rental yield also dropped down to around 3.5% to 4%, right? So a lot of people didn't find value in those areas anymore because it just went up too high too fast, and they slowly saw the property in those areas, the house prices started stagnating. And everybody had no love for Victoria because guess what? The government had no dough. And to recoup and to balance out the book, guess what they introduced? Land tax for investment properties down there. So that just scared everybody and no one wanted to invest in there. But we found value based on certain data points that we saw, and we loved Frankston North, right? So what we saw on our data point from mid-2024 all the way to end of 2024, owner-occupiers started shooting up around Melbourne area. And we started seeing house prices slowly increasing and days on the market on the listing slowly decreasing in areas such as Dandenong, Berwick, and Cranbourne. And not just that, we looked down south a bit more where it's closer to the water, and we actually saw house prices in Frankston slowly going up as well. But what really caught our attention was Frankston North wasn't getting enough love, okay? And we actually saw Frankston North was at least 10% cheaper than Frankston itself. And we actually realized that, you know what? Up here with Berwick, Dandenong, Cranbourne, house prices was going up, and Frankston here was also going up, but Frankston North, just in between them, the house prices wasn't moving as fast. And we actually realized, you know what? The trickle effect from these two areas will slowly divert to Frankston North. And guess what? Frankston North got onto the Australian Financial Review as the top performing suburb in Melbourne because we actually saw the trickle effect, like what I've been explaining, slowly diverting to Frankston North. And that's what I've been saying from the start of this video. If you just look outside of the area on the hotspots, call it 15, 20, 25 minutes away, even half an hour away, you can probably find the next warm spot that's going to go to the next hotspot as long as you can hold on to that property for a longer period of time. Because remember, investing in property is the long game. Even stocks is going to be the long game. You're not going to be a millionaire in the next 2 to 3 months, okay? So just please be aware of that. If you can't hold a property for the next 12, 24, 36, even 5 years, then guess what? You shouldn't be investing. So if you think I'm a one-hit wonder, I'm going to give you another example. In Tasmania, we found great value when Melbourne became too bloody hot. So we wanted to find our next warm spot. And that's when we went to Hobart, specifically around the Berrydale area. And we found great value in Berrydale because the house prices around there were at the low to high fives with a rental yield of around 4.5% to 5%. And that's when we had our first client that purchased specifically in Berrydale itself, where the average house price around that area was around $550,000 and now it's actually shot up to close to $620,000. Check out this graph up here from RP data. But as you can see from the house prices actually started slowly shifting up around the mid 2025s, right? But the thing is, when we started buying in Berrydale, it started steaming up. The next client that wanted to invest in Tasmania didn't have that budget because by the time they were ready to invest in that area, the average house prices around that area with a good rental yield was around $600,000. But guess what? Not to worry. We found the next warm spot because Berrydale started becoming a little bit of a hot spot. So we started looking at the outer regions a little bit more. And guess where we looked at? Bridgewater. In the mid 2025s, the average house price was around $450,000. The rental yield around then was around 5.2%. And that suited a lot of our clients because the sustainability in maintaining the loan with such a high rental yield in comparison to the purchase price was quite easy. Let's check out this graph right now. House prices around the area is close to the $540,000 mark. So in a space of 6 to 8 months, average house prices was close to $450,000. Now it's gone up all the way to $540,000. And that's why I said the trickle effect is so important when you want to start looking for the next warm spot. And like I said to you a few times now, you as a consumer can identify this yourself as long as you can put some research and some time in yourself. That's why we identified Bridgewater as our next warm spot after having so much interest in Berrydale area. Okay, now if you're researching in surrounding areas today, you're probably thinking, hey, why didn't the areas around Berrydale grow as fast? Well, we looked at a few data points and we just drilled down on a few variables as well. And also we actually had people that flew down to Tasmania looking at Berrydale, looking at Launceston, looking at Claremont, all these areas before we started recommending these areas because we wanted to get a better feel of the area before we recommend them to our clients. And that's why we were able to find our next warm spot. Now, if you don't like Tasmania because it's in a little surrounded suburb itself, there is still plenty of warm spots in the outer regions of Melbourne. So based on what I've just said, please try to do some research or get help from us and the team at PropSpotter up here, and let's see how we can guide you. So there you have it, everybody. That is what we call the trickle effect. So if you don't want to waste your money and using a BA or attempt to do some research yourself to find the next warm spot, please watch this video. Please subscribe for more content. I've got more videos up here for you first-time investors or even long-term heavy hitter investors to view. I'm your host, Tony Shah. Thanks for joining me on another episode of the Mortgage Chat, and I'll see you later.